Good morning. It's unusual. I'm on when the stock market is actually open. So let's see, YouTube Studio. So West Coast people, it is now 7:20. Whoop, whoop. Wake up and smell the coffee. Live. And we'll turn this on. West Coast people, it's not 5 a.m. when you're waking up and watching me now. So yeah. Let's say you. Then I'll go there. Do I get an ad? I didn't get an ad. Damn. Daddy didn't get paid. Let's do some scans because I didn't finish with the scanner. Just so everyone's aware. Just so you're aware. See? There is a thing around my arm. I was at the doctor's. So I had to go get my annual physical. So that's my annual physical. My apologies. I did write on social media. Morning, Cecilia. I did write on social media, on Facebook, and I think on Twitter too, that I was going. I didn't lie. I did not lie. But I think we're going to look at some different ones now than maybe some of the ones that I looked at this morning. XLY. We're up 1% because of Tesla, and Apple gets another. Shit, man, I was negative this morning, and now all of a sudden I'm probably positive because Apple's up so much. Let's see. I was looking at the doctor's office. I was on my phone. He's like, "What podcast do you have?" I said, "Daily Stock Pick," because he's a podcaster. He's like, "Man, I do it all myself. I don't have time to do it." I'm like, "I do it every day. Every day. Every day." Tesla 300 star, you crazy. You crazy. No, here's Tesla. This one's going for another. I mean, if this one can grab above 220, wait for Apple to 250. So 222, I believe, or 225. Let me see. We're going to go and look at I said if it holds 200, we'll be good. You're about to fill this gap between 250 and there. Your next resistance level is really probably going to be around 250. I would say now that doesn't mean that today's candle is all hunky-dory. That resistance right here, so we'll put in some resistance levels here. This gap right here at about 240, I would say you're sticking with the handles, 240, 250, 230. 230 probably has some, it looks like it's going to rip right through 230. So I would say 240, 250 is probably the most, right there. I would say right there is probably the next pretty good resistance because you can see we broke through it there before we really broke down. But I think between 200 and 250, I think you're doing well. I mean, just honest to God, I think you're doing fine. I do have to change Dell QCL. Mother effer. I sold out of this, even though it gets an entry today and it's up 2%. Oh, well. So the volume indicator on the right is price by volume. If you go up here, I'll expand the list. It is, let me see, Bollinger Bands, fair value, VBP, right there. So if you take off VBP, if you push that, and what that allows you to do, Eric, is you can actually move this back and forth. So I'm going to collapse this because you can never see anything. That's what that is. And it's nice because, like, say you move it back here where we really kind of lost it. It puts this into reality. So this one may be going to, this is QCLN. It may be going to 37. But, I mean, this is why I sold out of it. I've been waiting for this one to pull back up forever. And I was way up. I was just like, I'm done. I'm fucking done. I do Star. No. See, that's where you don't get it. So here's the psychology, Star. And I tell this to my girlfriend all the time. Yes, I have 7 figures, in the bank. I'm doing extremely well. Trust me, I am way beyond blessed. But I don't feel like that. And there's a difference between feeling rich and actually being rich. And I have a number in my head where I would feel rich, but that number continually goes up. And it's not because I spend a lot. I don't spend a lot. I really don't. I live on very frugal means. I have a nice house. I have a very nice car. Material things, I'm very well blessed in that sense, but it's not like I go out and spend money on stuff. It's, I buy nice things and I use them. But if I'm not using it, I don't go shopping and stuff like that. So my insurance plan is a $9,000 deductible. Now, I talked to my doctor today about this calcium test for your heart. And he said, hey, it's going to cost you, insurance probably doesn't cover it, and it's probably going to be $300-400. And I was like, $300-400 for my health, probably not that much. But every time I go to the doctor, it's $300 or $400. Like I went to the dermatologist, and I go to the dermatologist, and they say, you know what? You have a $9,000 deductible. It's going to be $500. And all they do is put some cream on it. So it is what it is. I'm not complaining. I am doing extremely well. But put it this way. There's a certain type of person who would win $100,000 who says, I'm going to go buy a nice car. Then there's another type of person that says, I'm going to put that $100,000 to work. I'm going to save it. I'm going to pay off debt. I'm going to do this. I'm going to do that. So, yeah. Brandon, I was just showing. I got my little scar here from the doctor's office this morning. Let me finish these scans. Dell, QCLN, which I sold out of today. And Ulta. Let's go to Bitcoin ETFs. IBIT passed up yesterday. Is it in the list? It is not. And I don't know why it's not showing up in the list. It should. QYLD. We're just going to put that in there. Energy names. There should be a couple. No, nothing. Leverage ETFs. Boy, that's a lot. Oh, come on. AMTS, BABX, FAS, BULZ, PSQ, COM. I got a lot to go over. There's quite a bit of news. Hey, Chris. So, long story short, those are two completely different investments. XLG is the top 50 of the S&P 500. and GEPQ is it's an income investment. So they're two different ones. XLG, you're really looking at growth. And GEPQ, you're looking at income. I don't know what the current payout is. So this will pay, I think it's a monthly dividend or something. And you have an annual yield of 8.91%. So historically, this one will lose value. So if we go over the 10 years, just 10 years, it kind of came out, I guess, in 2022. So you really can't go 10 years. 5 years, it's up. And you're getting a huge premium ETF. So essentially what it is they buy options. And options, the way it's put in, it's an ETF, exchange traded fund launched and managed by JP Morgan. The fund invests in public equities. So it's investing in puts and calls and things like that. So you don't have to. And it takes I think it's the NASDAQ 100 is what it does, that calls in. And it creates the premium that it gets from doing that is it actually pays you as the holder. Versus XLG is the top 50 of the S&P 500. So if you look at it, they actually own Microsoft, Apple, NVIDIA, Amazon. GEPQ owns nothing. As far as I know, they own nothing. So you're investing in something that's really just paying you a premium, and it's using the capital dollars to try and get premium. Now, I don't think it's been out there long enough to say, oh my God, absolutely, this one will not lose you your capital. So if we go and we look at metrics, we're going to look at performance and we're going to look at total return. Okay. I don't care about price return. Well, we can do that. We can do price return and total return. And we're going to select symbols, XLG and GEPQ. This is the way you use the tool is, okay, is my total return, it's looking at total return. Let me see. Will it do total? Let me see. Performance. Can we do both? Update chart. No, it's just going to do one. So here's the price return. XLG, it kind of over 1 year, it does about the same. It's about the same. But if we select metrics and we look at total return, just look at total return here, you're going to see select symbols, GEPQ. You're going to see GEPQ probably beats it over 1 year. Well, it underperforms. I don't know why. I don't know why. Essentially what it is GEPQ, if you're in it for income, great. But XLG, you're in it for the long term, and it's more of a buy and hold. It owns stuff. So, Chris, that would be my guidance to you. I don't invest in those income strategies because it's not that I don't trust them. There's some that's very good. I just don't understand options, and I'd rather have my money grow. And it's probably comes from the risk tolerance that I have. I don't want to see my actual capital stay the same or go down because I don't want income. I want to see that capital grow. And so it's just more of a sense of hey, GEPQ, it has its purposes. I just don't, for me, And don't let me swing you one way or another because everybody's risk tolerance is different. But that's the difference. It's an income versus a kind of buy and hold kind of thing. I like the XLG over GEPQ, but again, everybody's different. Everybody's got a different risk tolerance, and Apple's the only one. Let's look at NASDAQ. TMUS. We went over that yesterday as part of the TMUS, PayPal. Okay. Let's look at the S&P. And then I'll get to opening up my tabs, which I have a couple. TMUS, PayPal, and Apple. Interesting. Let's go back to the strategy tester. I have a feeling there's something up with that scanner. My dogs are snoring, which is always fun. Let's go to QQQ. Hopefully that helps, Chris. Helps you understand it. I mean, it's two different. My insight is, hey, it's paying you to kind of sit there and it's paying you options. Most people who understand options would prefer just to buy the options themselves. That's what you can do because that's essentially what they're doing themselves. It's a strategy. It's out there, but it makes it easy to do it. Yeah, Tesla deliveries. Let's go to Seeking Alpha because we're going to need to look at Tesla deliveries. They killed it. I mean, the bar was so low. So low. Han Solo. But it was incredibly low. Let's see. Do I have a Tesla? I don't have a Tesla. Oh, we do. Okay. And then we have that. I knew I had something in Tesla here. Let's see. Tesla rallies, Seeking Alpha subscribers. I got that one. Job openings, power pass, Fed share. I don't care about it. Powell's not going to say anything. This one probably makes a difference because Lily, I think this is a buy the dip. Okay. Buy the dip, Lily. Okay. We're going to go home. QQQ, we can look at the live 5 minute so you can see kind of where we're at. BFH. What the hell is BFH? Is this one of your wacky ones? BFH. Bread Financial Holdings. What the hell is BFH? Let's see. Oh, it's crypto? Provides tech-forward payment and lending solutions to customers in consumer-based industries in North America. It offers credit cards and other loan services. This is a long-time stock. It looks like it's been around for a while because you're going back to 2014. Valuation is an A. Growth revisions. Momentum's an A+. What does Wall Street say the price target is? 17 people cover it. $42 with a 6% downside. 1 up, not 10 down. Oof. I mean, it's up 1%. The growth, they're losing 5% year over year. My guess, and it's just a guess, is they are part of the consumer weakening. Yeah. That would be my guess here, Brandon. But, you know, favors the brave, whatever Matt Damon said. I don't know that I like this one. Let's see. Consumer finance. What's the quant rating? Opify, MoneyLion, Synchrony Financial. I mean, I think Synchrony would probably be a better one than Bread. We can look at Synchrony. There was an alpha pick, by the way. Berkshire. Let's just Berkshire. Most recent. I'm not saying that that's the most recent, but it's financial. Berkshire's a solid one. This one would probably be better, I would say, than Bread. And the reason, look at the revisions on this one, 9 up, 4 down. And if we go to the ratings and we look at Wall Street, it's got upside to its target. It's 1%, but you still have upside. And you look at the growth, they're up 9% year over year. So I'd probably look at that one instead. Let's go home there. We're going to go to QQQ. And I'm going to open up these. Okay. This was a really good video where Ross discusses. Oh, somebody's messaging me on Instagram. Okay. That's a good video. Ross discusses a strategy that made him profitable. This is a good steps to trading. I saw this one. I don't know who's messaging me. Let me see. I'm not going to look it out on air because I know I'm on. Oh. Oh, God, Brandon. Oof. Glad I didn't show that on screen. Good setups. There's education. Buy the dip on LLY. Seeking Alpha subscribers say NVIDIA is a top winner. Baltic Dry Index jumps. Zim has quietly, and we'll look at Zim. Top 10 ideas for Q3 from Bank of America. Then I've got the Motley Fool stuff. I posted this, but I'll post all of it in the newsletter. Nano Nuclear, which crypto, the dude just emailed me. I mean, this guy's killing it on this stock. It's down 2% yet today, but this one was like a $10 stock a week ago, and it's at 27. 4 tactical buys with industrials from Oppenheimer. That was an interesting one. I've got Atlassian shares advanced nearly 2% with an upgrade from Piper Sandler. So we can take a look at that one. I'll put that in the newsletter. 52-week lows yesterday. Interesting chart. 52-week highs from yesterday because JP Morgan hit an all-time high. I'll go over Costco and Etsy because I did sell finally out of Etsy. Tesla rallies because Elon Musk followed Kalanick yesterday. What's his name? Kalanick, Uber. Travis. We're going to put in Travis. And somebody noticed that. History suggests, I bought iBit yesterday. Top 10 U.S. ideas for Q3 from Bank of America. Do I have this already? No. Yeah, I do. Might get rid of that. We're going to put this up front. You know what? I'll keep that. We're going to get rid of it at the top. Get rid of it up here. And we'll just open up this one. Bum, bum, bum. Okay. There we go. Morning, T-Dog. Palantir has held on to that 25, so I'd assume that is. NVIDIA's down 1.9, still holding on to that 120 level. Lilly is down 2%. You got to buy the dip, okay. Okay, I'm going to hit record. Good morning or afternoon. It's 10:45. If you're on the West Coast, I am live at a reasonable hour for you. I will show you. Here, just so you know. Yeah, I gave blood. Well, I didn't give blood. It was taken from me. I went to the doctor. It was my annual checkup. I urge everybody, it's included in your insurance. Yes, I have Obamacare. My insurance has a $9,000 deductible, but this one is absolutely 100% free for me to go. And you don't discuss a lot, but he checks out your vitals. They check your cholesterol. They check your blood sugar. They check everything that they can. I have a thyroid condition because I went to Chernobyl back in 1993. But yeah, go to the doctor. It's a good thing. I mean, I got a shingles shot. Let's see. What did I get today? I got a shingles shot. Shingles. It's like Shitty Walk on South Park. But I got the shingles shot, which I missed my second shot. So I got that one today, the second shot. But let's look at some live stuff because we're here when the market's open. Fed Powell just said, hey, inflation is still strong, blah, blah, blah. We got to watch it, whatever. I mean, I don't think it really moved the markets. I mean, my portfolio is flying because Apple's up 1%. Is Apple ever going to stop? The Qs, what did we do yesterday? The two candles were totally green. Our RSI's at 63. Our MACD is still coming down. Has the algorithm gotten you out? No. You're still in from April 24th at 426. This one is putting in a nice little shelf here between 475 and 490. That's trading sideways ever since June 20th. I think we're setting up for another leg higher. Again, June is a strong, strong month. I did not buy TQQQ yesterday. There was no reason to buy it. On the 65-minute algorithm, we'll take a look at QQQ in the 65-minute algorithm because this is what you want to do when you're trying to buy something short-term that's running. QQQ is running. We know it's got a 100% win rate for the last 14 years. When we take a look at this and we look at TQQQ, you can see it got us in June 27th, but it got us out. Yesterday, July 1st at 12:45 at 481, it got us in. Now, if we go to TQQQ, because that's the one we really want to play for a short term because it's triple levered. And remember, if we think it's going to go down, you can just trade SQQQ. But TQQQ got you in yesterday at 12:45 at 74.66. It's at 75.28 now. Now, I do think that we're trading this sideways range, and I think we get up to 77. Do you want to buy this at 75 when your top is 77? No. Especially when you have this gap down here. In my mind, there's better opportunities out there. But this MACD being on this right on the oscillator, that's an interesting setup. If we go and look at TQQQ on the 4-hour algorithm, this is where you've absolutely killed it because you got out with a 15% gain. Remember that April buy that we had on QQQ? It got you in. This one's a little bit more sensitive because it's triple levered. It got you out with a nice 15% gain. It got you back in at 67. So what are you making now? Let's see. You're up 11%. So the average win on this is 17%. You could have a 6% upside. Your MACD crossing down again on the 4-hour. Your RSI at 61. It's not quite oversold. Am I getting in? No, I think there's better opportunities in this market. So I'm waiting patiently. We'll go over the steps that traders go through to try and make sure that you're getting an A+ setup. This right now, I'd probably rate it a B. Nothing more than a B. In my mind, because I'm so heavily invested. I'm so heavily, what am I, 95% of my money is in the market already. I don't need to risk that additional 5% and rush out. If I'm going to benefit from the up market. So I'm not rushing out to get this. I think it's a good opportunity. If you're only 20% invested in the market, I have no idea why you're not taking this risk. Honest to God, to me, that would be worthy of taking the risk. But for me, being that heavily invested, I just don't know. Now, if you want an email every day, this is look at your portfolio. This is the Daily Stock Pick Core Portfolio. And I get an email from Seeking Alpha every day that tells me, hey, this is a great, your portfolio is doing really well. Yesterday's winner, Tesla, up 6%. Dell, up 3.56%. I've added Dell in the core portfolio just in Seeking Alpha so I can track it. And that's the only reason, so I can track it. But the top losers, Simon Property Group, United Health, and Uber, And Uber was down for one reason. We'll go over that, and it's got to do with Tesla. But this email comes out every day to me. It is fantastic. It is part of Seeking Alpha Premium. If you want, you can sign up for a free 7-day trial, 20% off. You can use the link in Linktree, linktr.ee/daily stock pick. It is the second link. Now, if you want alpha picks, you can do the third. If you want to try a special July 4th, you can get alpha picks and 30 days of Seeking Alpha Premium, all for $449. So essentially, it's the price of alpha picks on its own, and you get a free month of Seeking Alpha Premium to see if you want it. We just had a most recent Seeking Alpha pick. So if you want that, you can get it. If you want the 4-hour algorithm, you can absolutely get it through TrendSpider. You sign up. These prices are incredible. $49.76 a month for the standard plan. Enhanced is $54.18 a month. I would just go with the enhanced because you get a lot more ability. And then you get advanced. This includes unlimited one-on-one training for $82 a month. That is an unbelievable deal. Tell me what other course allows you for $82 a month to get unlimited one-on-one training courses. This is a software platform where you get my 4-hour algorithm. You get my 65-minute algorithm. You get every algorithm, every watch list, every custom scanner that I use. And you just go over to the Linktree, sign up on the top link, and then email me. All my email's all there. So let's talk about what I did buy yesterday. What I did buy yesterday was IBIT, okay? There's a couple of reasons. This article I saw this morning, it wasn't a part of my buying decision, but history suggests Bitcoin will likely hit a new all-time high this year. That's a report. IBIT is an ETF, a Bitcoin ETF. It's one of the largest, one of the lowest quantities. I am down on this one. I bought it 36 something. It's at 36.09 was the buy. I'm down at 35.27. I'm down on this. Bought a couple $1,000. I'll buy more. I'm going to continually add to this. I don't know that this is going to be a huge win, but I do see that 42 is a pretty good double top, and it's the top range here. And now I don't have a lot of, this has only been around for 22 months, but we've only had an actual Bitcoin ETF since January, and that's when it was trading at 23. So it went through that rise up. It's trading sideways. I think we'll get another leg up. I bought some yesterday. I didn't buy a ton, but I bought enough to make it interesting and to dollar cost average my way in. Again, don't follow me, but it's just an interesting thing because the 4-hour algorithm told me to get in. Now, if you look at the 4-hour algorithm, it doesn't perform on this, but we only go back 22 months, and we only have 6 months of actual Bitcoin, spot Bitcoin. The rest of this was just Bitcoin kind of junk. So, understand what you're buying, but that one's an interesting one. Tesla's up 10%, 9%. It was the big winner yesterday in the portfolio as well. Tesla rallies after its Q2 deliveries tally tops the beatdown. Now, why was it up yesterday? There was no news on it yesterday. Nothing leaked about the deliveries. Nothing came out. You know what it was? Elon Musk followed Travis Kalanick, the founder of Uber, on X. The stock of Tesla soared. The stock of Uber declined. I have no idea what it means. Nobody said anything about it. Elon hasn't mentioned it. He just followed him. And somebody noticed that. And immediately, then the stock of Tesla went up. And Robotaxi, remember, it's August 8th. Does Travis have something that he's going to add to it? If you want, Super Pumped, I think, is the series from Showtime. It is fantastic. It shows you the Uber rise and how just shady as F Travis is. But, he's a good businessman. He understands business. I would say here on Tesla, I would say your resistance is 250. Now, am I going out and buying this? No. The reason is because your average win on the algorithm is 18%. And here, the algorithm got you in at 183. What are you looking at right now? A 25% gain. I would expect some type of reversion here. And I think you're using 200 as a support level. Old resistance turns to new support. This is not trading on any valuation whatsoever. This one you have to trade on just the chart. And again, the all-time high, 414. Are we going back there? I don't know. The 50-day just crossed. This is a weekly. The 50-day just crossed under. I pointed out, hey, these arrows, That was when the stock was low. That's when it hit that 139 and it bounced right up. I said this one might trade sideways between 170 and 190. It ripped past the 200 point. I own this through XLY. This is part of the reason, because I don't know where this one's going to go, but I do think that 250 is a pretty good resistance level. If it rips past that, I think you're looking at 300. We have a lot of catalysts in this name. So just understand that. Now, one that I almost got out of yesterday was Costco. And that's because the algorithm said to sell. And you can see the alert here. I was sitting on my couch and I got the alert that, hey, take your 17% profit and be happy. We might see something lower. Does it time the top? No. But it says, hey, you might see something lower. So you might ask, why didn't I sell it? The reason is, again, the story on Costco is the membership raise. And I think it's at least a $900 stock. I have a small position in this. When the algorithm gets me back in, I will buy more. That's the way I'm playing Costco. I have to look at it because Costco is an incredibly expensive stock. Incredibly expensive. If we go over here and we look at Costco in the Seeking Alpha Quant, it is a hold. And the reason is the valuation and the growth. The valuation, look at the PE, 53. When you go and you look at the growth, year over year, their revenue growth is 7%. That's not bad. The sector's growing at 2.63. When you go and look at the valuation, let's put PE and growth together and do the PEG ratio. You're 174% above it. Why are you paying 50 times future earnings when you can get something like Walmart? And it's similar at 29 forward earnings. Again, you've got to pick which ones you want. Now, the Wall Street analysts have Walmart at 72. That's their price target, 6% upside. If we go and look at the Wall Street analysts for Costco, their price target is 844. That's a 1.7% downside. So again, I'm looking at this one as valuation. If there's a membership raise, that average price target gets raised. The actual valuation gets raised. Everything goes up. So that's why I didn't sell Costco. This is, you want to add to your winners. You don't water your weeds by adding to your losers and dollar cost average on your way down. You add to your winners. Bottom left, upper right. This is a winner. It might have run too far too fast. But right now, between the gold coins that these guys sell, between the TVs that these guys sell, the July 4th sales that they've got going on, I like this one. One that I did sell was Etsy. And the reason was, I love this brand. I do. It's not working. The story's out. The story's old. Upper left, bottom right. This one I took quite a big loss on when I had a big win. I bought way back here in 2020. I had a nice 131% gain. I let it all go. So I bought somewhere in the neighborhood of 138. I'm selling at $58. Again, you have to understand. I make mistakes just like every other person makes mistakes. You don't want to follow me for this reason. I give you good guidance. Do as I say, not as I do. So I got those two. Another one that I sold, QCLN. I said I'm out of this one. Now, QCLN is up like 2% today. But this is another stock that is upper left to bottom right. I don't like the stock. $34.99. Algorithm got you in. It got you out yesterday. I said I'm selling it. I'm finally selling it. Now, I did make quite a bit of money on this one. And the reason was I bought this one down here at about $19. And that was March of 2020. And you want to know why I bought it? The reason I bought this in March of 20, or I may have even bought this earlier than March of 2020. It might have been even like April or something. I wanted access to clean energy. Now, it hasn't turned out well because I had this all the way up at 86 and I'm selling for half that price. I'm still making money, but it was just one that I thought was going to turn around. The story just never took hold. I'm taking that money and I'm putting both these stocks into NVIDIA, SMCI, Dell, HPQ, whatever. It's going into AI. It's going into AI. That's where I'm taking those. I'm taking my loss from Etsy and I'm taking my big gain from QCLN and I'm putting it in there. Now, all of these stocks, this is important to look at. All these stocks hit 52-week highs yesterday. That was Eli Lilly, JP Morgan, Bank of America, AT&T, Arista, ANET, Discovery Financial, Endeavor, Evercore. There's a ton of them. Sprouts, which is an alpha pick, but I'm not supposed to say that. But again, these are stocks that hit a 52-week high. That's always good to look at. What's even better are the stocks that make 52-week lows. We have Nike coming up as a question. I'm going to go over this one. There is no reason to buy into this one. Walgreens, I hate it. BioNTech, I hate it. Las Vegas Sands, they're doing some renovations. You don't need that while they're doing renovations. Yum China, don't like any of these. SolarEdge, Teladoc, don't like any of these stocks. But is it an opportunity to make money? I'd rather invest in the ones that hit 52-week lows than the ones that 52-week highs, because I think the upside on a good story is going to come back, but you have to make sure that the story's there. One that I got a message about off of, I think it was CNBC, is Atlassian. This is Team, T-E-A-M. Shares advanced nearly 2% following an upgrade to overweight from Piper Sandler. Rob Owens. Owens added the stock's current price is an attractive entry point for investors. So this is from analyst Piper Sandler. Look at that. I mean, again, 158, and you're looking at 180, and the 200-day still moving negative. You have a gap up here to 198, almost 200. Then you have a gap above. That 50-day is just starting to turn. I don't think that's a bad one to get into. We can look at Team over here. If we look at Wall Street, what's the average price target? The average price target is through 239. That's a 32% upgrade. Now, Quant has it as a strong buy. Why is it a strong buy? Well, the valuation's only a C+. The PE, crazy. But the PEG, forward. This includes the PE and the growth, is a 1. Sector median, and this is information technology application software. Software is starting to turn around. We talked about Snowflake yesterday. Team might be one that could be a good trade. Look at the weekly, because you're looking at, again, 239, you're looking at resistance at about 240 or 250. If this one can bounce up. Now, I would argue that this one is bottom left to upper right until it can prove wrong. So once you're making lower lows, which means that you're down below 130, that would mean that this one's lower lows. But this one looks like an interesting one. So interesting to look at, interesting to talk about. I'll put it in the newsletter. 4 tactical buys within the industrial sector. I won't, the Uber, XPO, RSG, which is Republic Services, Knife River Corporation. This is from Oppenheimer. It's interesting. Take a look at the charts if you want. Nano nuclear, cyberpunk. Somebody emails me named Cyber. I forget the entire email address. This is the dude who's killing it. NNE. Now this article came up, and I kind of went over this in social, and I said, you're crazy. It doesn't make any money. It's an IPO. I don't want it to be in this one. This one has been super volatile. Super volatile. Here on the 4-hour, it's got you in at $10. And that was June 17th. I think he emailed me here on June 28th, and it was at, $15. It's now at 27. Yesterday, it got to 32. So this one is a high flyer. I thought this was interesting because it talks about unveils recycling partnership with Curio. Shares extend the rally. Nano nuclear was up 30% yesterday in Monday's rally. Today, it's down 3%. Expect volatility, but it's an interesting one. Now, in the quant, it's not covered. Wall Street says it's a strong buy. Understand, it is not a strong buy of all of Wall Street. This is one analyst in the last 90 days, and he put out a price target of $39. Understand, they are not making money. This is a complete kind of sham of a company so far. Their market cap is $802 million. And we can look at the valuation. Let's see. They're not making money. The growth, they're not doing anything. Their profitability, they're not making money. So they're basically losing money. You are kind of throwing your money at a once-in-a-lifetime chance. But I thought it was interesting. I'll bring it up. Motley Fool released a bunch of stuff, new recommendations from the 27th, including Anon, Ha, Skills. Well, it's buy and sells. I'll put it all in the newsletter for free. Stock advisor groups, they recommend Shopify, McKesson, Melly, Visa, Celsius, Spotify, Airbnb, Kinsale, EQT, and Chewy. And without further ado, they released their the foundational stock: Arista, Kinsale, ServiceNow, Tesla, Trading Desk, Amazon, Apple, NVIDIA, Walt Disney, and Vertex Pharmaceuticals. I'll put all that in the newspaper. You'll be able to see it. You can chart these things for yourself. The top 10 ideas for Q3. We're in Q3. 9 buys, 1 underperform. This was interesting because Elanco, ELAN, I had a social request about that one. And I said, hey, this was a veterinarian who said, hey, we get all of our drugs from them. This one took a huge drop. This is one that Bank of America says is in the top 10 for Q3. I would argue you would want to wait to get this one because right now it's too weak. I don't know enough about the stock, but this one says the company's innovation pipeline is expected to be a hard catalyst that should move the stock, analyst Michael Riskin says. General Electric, great company. Global Payments, great company. Goldman Sachs, great company. Palantir, core portfolio. Goldman Sachs and Palantir are both in the core portfolio. Spotify, you may be listening to me on Spotify. This has been a great stock. Union Pacific, it had its pullback. Vertiv, I own Vertiv. The one they say sell is CarMax. The sourcing environment for used cars is still challenging. Carvana is a perfect example. Carvana, I don't know how they're paying me for my car, what they paid for me. I don't know how they're getting the value of those cars. They charge you a premium for putting a freaking coin in a big vending machine. That's it. Now, one that I want to point out, Baltic Dry Index jumps to nearly 2-month high as capsize spot rates spike. Zim. This is the one of the stocks in this story is Zim. And I know I get a lot of questions about Zim. This was a pandemic favorite because they kept paying a huge dividend, just special dividend upon special dividend upon special dividend. The yield right now going forward is 4%. The growth, a D. But what I want to point out is that Zim, very quietly, over like a couple of months, has doubled. It's doubled. This has been a crazy stock. Algorithm got you in at 10, okay? It got you out with an 88% gain. Now, Algorithm here got you in at 20. You're at 22. You're at a 10% gain. It's got confirmation. MACD's crossed up. RSI a little bit high, but I wanted to point it out because it's one to keep an eye on. Now, it's ranked number 10 from the marine transportation sector. Euroseas is the number 1. Kirby. You can go by market cap. Again, you look at the biggest market cap and you look at these. I'd look at this KEX, K-E-X. They have a $7 billion market cap. This one is a strong buy in the quant. They like it. You know, growth A, valuation C. This one might be one that's worth it. Look, it's bottom left, upper right. So again, that's how you use these tools to find it. Now, Seeking Alpha subscribers, we're all polled. We all voted. NVIDIA was the clear winner. NVIDIA, 31% of the Wall Street Breakfast poll believes NVIDIA will be the best top performing stock in the second half. The second half. Again, you've got Microsoft, you got Apple, you got Amazon, you got Google, and you got SMCI. 3% said SMCI. But again, NVIDIA is a stock that I think is set to explode. I think their next earnings are going to kill it again. I am going to add to this stock. I've said it before in my paid newsletter. I've said it on this one. It is 100% a stock that you want to add to. And if we go and look at the chart, and I've said this before, it is holding on to that 120 as its support level. It's trading sideways. Now, 122.80 is where I put the support level, but you're clearly seeing it just pull up and pull down. You want to add it between 115 and 122. Just add to it. Again, it's setting up that nice sideways move. Are you coming down to 50? I don't think so. But I've been wrong before. Look at me with QCLN and Etsy. You know, I held on to those. But again, I think there's a large part of the market that believes that NVIDIA, they're not going to pull it back to 50, you know, unless they miss it. Now, Eli Lilly, we're in a GLP-1 market. These are down 2% because Biden urges lower drug prices. I don't know if Eli Lilly's valuation is going to be good enough to hold up a $900 thing. But when you see a big candle like this, okay, you want to make sure that you have the opportunity to add to it. Right now, you're in a 24% gain off of Eli Lilly. If you had bought it with the algorithm on April 26th, April 29th, you get a 26% gain in what, 63 days? That is unbelievable. You're starting to see it turn over a little bit. Would I get out? No. Am I adding to it? I'm going to hold off for a little bit. Right now, you see some weakness. You see the turnover. This may have just run too much too far. And we might see some weakness in the healthcare because, again, remember, the Qs are the largest winners 100% over the last 14 years. So I'd say buy the dip. Just take a look at it. But it's a good one to try and get back into. Now, confirmations for, this is part of the education, confirmations for good trade setup. Pull back and retest. We do this all the time. We find support. Old resistance turns into new support. That's what this is saying. Volume spikes. When the price is trending and accompanied high volume, it adds conviction to the direction of the trend. You've got to know volume adds to the trend. So if you see a huge volume spike and you see confirmation, add to that particular stock. Moving average crossover. This is one I talk about all the time. The death cross and the golden cross. The 250 day. This is an indicator based on confirmation. Here, use a long-term and short-term moving average to give confirmation for the direction. You can use the 8 and the 21. There's a ton of them. If you just Google moving average crossover, go onto YouTube. There's thousands of videos on there. Support and resistance level. When the price tails to breaks beyond significant levels of support and resistance, it gives a conviction that the price may reverse in the opposite direction. So let's take Tesla. Tesla's a great example because I put these in before and I've said, hey, you want to take a look at these levels. Okay. I said that 139, it was a perfect, that's going to be resistance level. So if you were buying up here and you were saying at 177, where do I want to get out? I'd tell you for a long-term buy, you'd get out at 140 because you've got significant downside. And where do you want to get out on the high side? I would have said 200. You're right in the middle. Great buy. Fantastic buy. We've ripped right through there. So this old resistance becomes new support. And why did I think it was resistance? Look at that. Look at how it used and bounced right off it, and then it bounced straight down. This stock tends to do that. It tends to go in different places, just all over the place. And look, this one, it bounced up off of that. Boom, it bounced down off of that. That's why I'm saying 250 is that. I just think that that's a key. So if you want 4 good ways of trading setups, this is your thing. It's right on my Twitter. I'll put it in the newsletter as well. This is a great video. About 10 years ago, Ross was struggling to become a profitable trader. One day he had a blowout loss. After going through his metrics, he discovered patterns. What this video showed me is that Ross documents every trade that he has. That's the key. If you don't document every trade, and how do I document trades? I have a personal portfolio here that is hidden. It's not one that I have showing, but I have a personal portfolio here, and I have the core portfolio here in Savvy Trader, and I document everything. And so I do that. Was it that before? I was using Apple Notes before. I was using a spreadsheet before I had Apple Notes. But you've got to find a way to actually log your trades so that you can go back and look at them. And that's what Ross goes over in this video. He goes over his entire strategy. I thought it was really, really good. I watched like 10 minutes of it. It's a 53-minute video. I didn't have time to watch the whole thing. So, hey, have at it. If you want to watch it, I'll put it in the newsletter. Social requests. Radon P from Spotify. Can you go over ITB tomorrow? ITB is the home builders. I bought this one. And I bought 3 or 4 small positions in this. And I think I'm done. I think I'm going to get out. Honest to God, I think I'm going to get out. There were a couple of home builders just got downgraded. And we're seeing some weakness in the housing sector. Now, I did say I was buying this for a long term. But I do see some breakdown of support here. So if we bring this back to October, let's bring the volume back to October where we should have gotten in, where this one was trading at 72 because it came down, and we're dealing with higher for longer. There's no volume here between 98 and 88. Nothing. So what's going to hold on to our support? Now there's a bunch of people holding on where I am. Between 99 and 105, there's a bunch of people holding on there. I just don't want to be one of those people because I think your next level of support is actually 87. And I think from what I'm hearing, I'm looking for a house in Florida right now. And so I'm doing some selling, and I was on YouTube, and the algorithm tells me, ooh, you might want to watch this. It's all about how inventories are up. Inventories are up. That's why I don't get, I get a little bit nervous about it. And then I see this, Kobayashi letter, and it's about the housing market. And it's a U.S. new home inventory awaiting a buyer surged 99,000, the highest level since 2009. What was 2009? That was the housing crisis. You could have bought a house for $10,000, I think. Probably not. That may be an exaggeration. But Raybon P, I may just take the loss, and I may just move this into AI or GLP-1. I may buy Lilly. I may buy NVIDIA. I may even buy Roblox, because you know what? Roblox is trending towards 40. I told you a bunch of times that it's going to fill this gap all the way up here to 40. And then we'll probably go into 45. So I made that mistake. I'll probably pull myself out. But again, I'm not going to water my weeds. I'm just nervous about that one. Lou Dog's Music. Is Nike worth getting into since it dropped to 75? I've said it before, and I said it before earnings. And I told people I didn't trust this company. I didn't trust that they weren't going to, screw this up. I don't wear Nike. I wear Puma. I wear Adidas. And I wear New Balance. I'm at the age where New Balance is pretty much my Gucci. Nike shoes, I don't wear them. I got wide feet. They don't make wide freaking shoes. I don't think they have technology like Anon does. Anon made wide shoes, but I tried them. They weren't wide enough. So Anon's easing out. Hoka, fantastic brand. That's Deck. So I think Nike is one that you just wait. Because if we go over here and we go to Nike, the valuation is still bad. They're not growing enough to actually pull you out. Their PE is still 19. You still have downside available on this. You still have downside. Again, I wouldn't look at this one as oh my God, I'm going to catch the falling knife. I would look at this one because you do have a gap here between 79 and 94. You do have a gap. But when we go to the weekly, are you in a situation where it's bottom left, upper right? I would say no. And I said this before. I said this $88 is probably support. You've broken support. Where's the next support level? I would say it's down here, and I would say it's at 66, 68, somewhere in that neighborhood. That would be where I would say the support level is. I don't think you catch a falling knife. I think what you do is you wait for this 50-day to actually turn positive. Because if you're going to get back to the 200-day, that's 122. And if this company has management that's going to turn it around, they will get it back to that price. It won't be this year, but it might be next year. So is Nike worth it? If you're wearing Nike clothes and you love Nike clothes and you buy Nike clothes for your kids, go and get it. But I would say other than that, you don't want it. You don't want it at all. I'd say there's no good reason to get into it. Let's see. Trenton, I love your podcast. You're awesome at responding. You're definitely helping a college student out. I've been doing some research and found a couple of stocks. MHO, ASI, PLAB. MHO is a Motley Fool. An alpha pick. And I think it's from long enough ago that I can go over it. They don't like me going over stuff. This is MI Homes. I don't even know what they do. But I do know that I have it in the TrendSpider watch list. And you can see from the quant, it's a hold. Now, how long has it been a hold? We can go and look at that one, but let's see what they do. This one, cheaply valued, high quality business, company face. I remember bearish on MHO, economic and company data point towards cyclical. Due to factors described in the article, more MI home stock profit could be taken on the horizon. Engages in construction and sale of single-family residences in Ohio, Indiana, but they're a home builder. Company operates North American home building, Southern home building, blah, blah, blah. You can see the 52-week range is between 74 and 140. You're at 116. Let's see what Wall Street says is the actual one analyst. One analyst means nothing. Let's go and look at the quant because they do cover this one. And it got you out of a strong buy at 130, 127, 125, somewhere in that neighborhood, 125. And it peaked up for a strong buy at 126. I would say that 126 is probably your resistance level just based on this chart and where they're pulling it out of. I would say 126 is probably that. Now, if you look at the 52-week range, The growth, obviously. The growth is where it's having problems. Down 4.48. We just talked about home builders. So MHO, it's an interesting one. Am I getting into it? Probably not now. I would look at some other sectors because, again, that's just where I would look at. But AESI, this is Atlas Energy Solutions. This is energy. Oil and gas, it's a hold, but it's a strong buy from Wall Street. We can see how many analysts. 12 analysts, that's not bad. 38% upside. Doesn't look horrible. It does look like the profitability is horrible. Why would a oil and gas profitability be bad? Leverage free cash flow. How are they losing 36% leverage? They're just spending too much. That's what this one is. 33 out of 50. I'd probably look at another one. PLAB. Let's look at PLAB. This is Phototronics. Let's see. The quant says it's a hold. Wall Street says strong buy. How many people? It's got one analyst. One analyst. I mean, don't listen to this one. We'll go look at the chart on this one. But this one, what do they do? Let's see. Engages manufacture and sale of photomask products and services in the United States, Taiwan, blah, blah, blah. It offers photomasks are used in the manufacture and integrated circuits and front panel TVs, displays. Not a bad one. I'm in the market for a TV. Let's see. PLAB. But again, I don't think that this wouldn't be one that I'm looking at. And the reason is the market cap is $1.55 billion. That's a small cap company. I'm not looking at $1.55 billion. I mean, for me, you look at the growth, you look at the revisions. It's not one I would typically look at. The algorithm, the 4-hour algorithm, it loses you 9%. You make 23% buying and holding. Probably just better off kind of, playing your own game on this one. The algorithm doesn't work. So Trenton, I don't know that any of those, to me, makes sense. Where do I want to put my money? AI and GLP-1. I mean, where am I going to make the most money? AI and GLP-1. I think there's better places to put your money. Those are three that I'd probably toss. SKK, I was looking at Nike because the RSI is ridiculous 17, and there may have been an overreaction, but then I noticed Skechers is ranked number 1 on Seeking Alpha in the quant. It's a strong buy. And yes, that's how you do it. Zach from Spotify. That's how you do it. SKK, why does it do SKKY? We want Skechers. Skechers. Let me see. Let's go over here. Skechers. Do they have a symbol? No, we're just going to look up Nike. We'll go to Nikes and then we'll go to 8 out of 10 in footwear. I thought Deck was number 1 on the Seeking Alpha, but we can look at it. It's SKX. Oh, and he did put SKX. Here you go. Let's look at the valuation C, growth B+. I mean, this isn't a bad one at all. You got, revisions A-, and you got a nice little pullback here, 69, 65. We can look at the ratings on this one. We can go and we can look at Wall Street. There's 16 analysts that cover it, and you've got a 17% upside. Historically, you've seen it pull back, and it's kind of come back up. Now, the only one that I would worry about, the only thing is, are we looking at a weak consumer? If we're looking at a weak consumer, then anything like this is going to be hard. And where you're dealing with all-time highs here, algorithm got you out with a 23% gain. Algorithm makes you 25%, you buy and hold, and you make 75%. I'd be worried this gap right here between 65 and 59. And the reason is, that's the most recent earnings. You have earnings coming up in July 25th. I don't think that's a bad one to actually look at buying. It is a crazy oversold. It's at 25 on the RSI. But I would argue, Zach, do not buy the falling knife and try and time it. And the reason I wouldn't try and time it doesn't have confirmation. You have continued weakness. Today you're down 1%. Where would I look for some type of support? If it bounces off of this gap. If it enters the gap, I wouldn't buy it until it started to exit the gap. So say you go to 63, okay? And then you say, well, it's got to fill that gap. But say it starts to climb and you gain confirmation over that 9-day, and all of a sudden you're at 66, buy it. Just buy it, because you're probably going back up to 72. Now, that's saying a lot because you've got July 25th. What are we, 22 days away? 3 weeks away from earnings? You got a big earnings season coming up here in July, by the way. The banks kick it off later. But you've got some pretty good earnings coming up. So Let's take a look at some of the cross-ups. We've got Goldman Sachs on the scans. Goldman Sachs, great company. You're trading sideways. Algorithm gets you in at 462. You're at 461. Do you get in? I don't think that's a bad one. Look, the MACD reset itself. The RSI coming down. You have earnings coming up next week, July 12th. Or maybe in 2 weeks. I don't know. Maybe, 2 weeks. July 12th. Goldman Sachs is reporting on July 12th. That's going to be a killer report. Bank of America, we're at all-time highs. 52-week highs. 52-week highs. It gets you in at 39. Anything under 40, I think, on this stock, I think you're good. I think they'll say something about having to, the low bond rates, but they're fine. They're fine. Again, I think you're better off at 35 on this one, but I think if you want to buy and hold for long term, I think that's a perfectly fine one to buy. Dell, we have another buy in Dell. It's a cross-up. Again, we're trading sideways. I've said it before. Anything between 132 and 143, you buy. It's just trading sideways. That is setting up. We have had so many insider buys. Let's go to FinViz because what I want to show you is how many insider sales that we've had on Dell and why Michael Dell has sold billions of dollars of this stock and it has just been under pressure. Okay. This is all from June and that's billions of dollars. I mean, we're talking hundreds of millions of dollars per sale. And you're looking at this, and that's just since June. June 20th, STLTA, which is a director, general practice, an LLC, they sold what? 163 million, 163 million, then 37, 37, 41, 41, and then 61 and 61. They're selling a bunch. The president sold $24 million. This STLA, they sold $20 million here. Chief Executive Officer Michael Dell sold $469 million and $379 million. And again, you look at the stock price. Where has it gone since then? This is May 29th they reported earnings. It hasn't moved down. This is coiling up for another move up. And I would argue if you go and you look at this in Seeking Alpha, it's still a good stock. I think it's a hold in the quant. Yeah. It's a hold in the quant, and it's the valuation. Now, understand the valuation's not bad. It's the growth. It's these margins. It's down 7%. The revenue growth is down 7%. And when you look at the profitability, it's the margin, 23%. The sector's running at 49%. And they're scared because they think the server business is going to take down these margins even further because there's not a lot of margins on a server. And that's where SMCI is getting hammered. That's where Dell's getting hammered. That's where HPQ is actually going up because they're actually selling more in order to boost their revenues. So again, you look at these and these are interesting. Apple has another buy. I mean, this is just a buy within a buy. It's not like Apple got you out. Apple's keeping you in here at the 169. We just got another leg. My algorithm, say it all the time. It's based on the MACD. And what did we get? We got a MACD cross up. It's based on the MACD. The RSI is at 65. Am I adding here? Probably not. I think 220 is your resistance level. That's the previous high. We're double topping it. If you see a big sell off, that's double top. Okay? Because this high on this candle is 220.20. And you're at 219.47. Where'd you get to on this candle? 220.33. 13 cents off from that double top. So we have to hold that in order to do it. We had a bunch of the QCLN. I told you I sold out of that one. That one had a cross up. We're looking at leveraged ETF AMDS, which is the short of AMD. All of these levered ETF BABX got a cross. We're looking at opportunities to buy and sell here. Now, there are two sectors that tell you that they're going into bullish mode. XLF. XLF is one where it got you out with slight loss. We're trading sideways. XLF at 41. Where are you looking to go to? I would say that this up here at 42.50 is probably your top. But you're using that 200-day, and the 200-day is still moving positive. The MACD's on the oscillator. The RSI's in no man's land at 53. I think you're fine. Again, you're not playing a sector for a huge move, but you can go over to Seeking Alpha and see what's in the sector and maybe find some stocks that you want to invest in. XLY. This is Tesla. 40 to 50% of this entire ETF is Tesla and Amazon. If you don't think those two have been killing it, look at this move, and we're getting ready for another move higher, 175 to 185. And let's see, your average win in XLY, which by the way, pays to trade. Your average win is 7.48. We're up about 5-6%, depending on where you're trading at. Looks like I'm not going to grab it, but yeah, 5-6%. Now, here's the way the algorithm works. If you listen to this, you're making 53%. If you just buy and hold like me, you're making 25%. Now, I trim this every now and then. If I need more money to get into something, I'm heavily into XOY, so I'll trim it and I'll put the money elsewhere. I've got plenty of cash right now. I'm not trimming it. I'm not looking to get out. It just gave us another bullish signal. So anything that you want, you can get on the link tree. Support me here by just using these links. Webull is a great platform. In fact, that's where I bought IBIT yesterday. I bought it in my Webull account. I bought a couple $1,000 in there. I also bought it in another retirement account because I can, now that you can do Bitcoin in retirement. If you want TrendSpider, you saw all those sales. They're going on. Seeking Alpha right here. If you want the Alpha picks with Seeking Alpha, 1 month of Seeking Alpha for free, I will put that in the newsletter. I am not putting that on the link tree. It will be in the newsletter. It won't be on the link tree. But if you want TrendSpider, you can get that. If you want just Seeking Alpha premium, get that here, 20% off. If you want it, Savvy Traders right here. You can follow my core portfolio for free. Anything that you want, it's on here. So, okay, that's it. I'll talk to you guys later. So, okay, I'm done by 11:31. That ain't bad considering I started late. Apple's going to run. Apple is probably, again, I think it's 220. I think right now that's the double top. And I would say, I'm not looking to necessarily trim Apple, but I can't imagine that this thing goes to 250. If it does, kudos to me. But God, that valuation is super, super stretched, especially when you think about their growth. The profitability is just killing it. I mean, the profitability is unbelievable. But the growth, look at the revenue growth. They're down almost 1% year over year. And revenue growth going forward, they're expected 1.65. The sector's at 6.6. But when you're that size, let's be honest, 1% is unbelievable. But again, you look at this, the valuation's an F. And it's because you look at the PE, it's 33. The sector's at 23. And if you look at it's 7 out of 28 in the information technology, what's number one? Supermicro, which, by the way, has a new strong buy. It came from sell to strong buy again. And it 4.98. This was just today. It gets upgraded to strong buy. So, this one's going to move between 700 and 1,000. Morning, Rollins. MU, Micron. Micron's good. We just had that pullback. You look at it, it's a hold from the quant, strong buy on Wall Street. The reason it's a hold is the valuation, and I would tend to agree. It's a strong buy from Wall Street with a 20% upside at 157. Now, what's more interesting about Micron is the chart, because you've got this gap down. Did it gap down? I don't know if it gapped down. I'm pretty sure. It didn't gap down a ton. It got you out with a 19% gain. But you don't have confirmation. And the MACD is still going down. The RSI is at 37. It's a bit oversold, but it could go lower. And the reason I say it could go lower, if we go a little bit more long-term, look, I mean, you're using 100 as your support level. You could be using 130 as your support based on this one being pulled off there pretty quickly. But that's not super strong support. 100 super strong support. So S Medina, I would be looking for this one. I mean, just look at that MACD. We've got more downside available because, again, you look at this valuation. Is it crazy to think that we have downside? No, they're not making money. And that's the key about Micron. They have so much debt that they're not making money. Now, when they make money, this one's going to explode when they actually do it. Because when you look at the growth, They're up 17% year over year just on revenue. But again, they're not making money. That's the problem. When you look at the profitability, they've got 11% margin. The sector's selling at 49%. That tells me they don't have pricing power. So it's not one that I would necessarily run out and buy right now. But I do think that it's interesting that, a lot of people think that it's going to be perfectly fine. I just, Micron, I'd rather have NVIDIA than Micron. And that's probably just my boomer stuff. IONQ. IONQ is Brandon's favorite. They're not making money. I mean, trade it. They're not. This is upper left to bottom right. I mean, if I've ever seen one upper left to bottom right, it is this. They're not making money. They're just not making money. So, and that's the problem that you have here. It's just not making money. If we go and we look at why, has characteristics. The company has leveraged free cash flow of minus 193%. Yeah, if you go over to FinViz and you look at IONQ, because maybe you don't have Seeking Alpha Premium, so we'll use FinViz. Minus 170, okay? Cash on hand, $1.78. How many shares do you have? 206 million. So say $1, let's see. What's 1.78 times 206 million?
The answer is 20,600,000.
20 million? So they have 20 million? That doesn't seem right. They have 200 million. It's like a year of runway. Then they're going to dilute you again. They'll probably dilute you before you get there. And you look, is anybody buying? I mean, they're not selling in huge quantities, but March, somebody bought at $9.28. Where are you trading right now? $7. They're not comfortable. They spent $1 million. So I don't like it. Again, I sold out of this one. I got sick of it. I got super, super sick of it. Now let's see. Let's look at my portfolio. Because, since I'm live on, and the market's open, I mean, we're almost at noon. Holy shit. I'm up 1.2%. That's a big amount, too, in a 7-figure stock portfolio. So it's a lot of money. I'm making double what I made when I got out of college in a year, just today. Tesla's flying. God. Oof. This stock, I mean, this is just one that you're creating gaps. Oh, you're welcome, Star. See, Brandon, you may have missed the whole thing where I still feel poor. And trust me, I've lost more than that. What? Let's see. Okay. I've lost about 10 times that amount in a day before on a bad day when the market's down like 3-4%. That was 2022 exactly. So it's hard, man. And part of the psychology is, and you guys will get there. If you're listening to me, you'll get there. I mean, if you follow a program and understand that, yeah, we're in a GLP-1 and an AI market, and you've got to invest in these themes, and you've got to find the winners, and you got to make sure that you trim your losers, and that you just get out of ones that are not worthy, and that you don't go balls deep on the first, your first buy. You kind of just stick the tip in, don't shoot your load the whole time. So, just understand that when you get to larger portfolios, the dollar amount that you're looking at is not as important as the percentage. And I've gone through that transition where I was like, holy fuck, that dollar amount just kills me. I used to make that. I used to need to work a year to make that. And the psychology of it is, and it's for those of us that check our balances on a regular basis. If you're just a guy who gets stressed out about that, do not. And that's why I use the sleep test. If you're somebody who's going to lose sleep over this stuff, do not check your balances. I don't lose sleep. I didn't lose sleep when I lost, hundreds of thousands of dollars. I didn't. I knew that I had a plan. I knew that that plan was going to work. I was out of work. I wasn't working. So I love that reference, Brandon. Don't go balls deep. You don't want to shoot too early. I do like that one. I'm glad I didn't sell Costco, man. It's up 1% today. That was the right move. Now, Etsy, I think, is up like 1%. I think QCLN's like up 1%. But they're ones that, Etsy's up 2%. But do I believe in the story? No. So I'm happy I've got out of it. QCLN, it's up 1.5%. I don't believe in the story. It's tomorrow at noon. Let me see. I think you can go to my profile on Twitter. I think you can go to my profile. Oh, if you don't think I've prepared some shit for this, yeah. I've prepared some shit for this. I just don't know if they're even going to call on me, because when you look at it, and I don't know how freaking Spaces works. I mean, honest to God, I get so sick and tired of sitting here listening to people say, here's the support level. Here it is. You can set a reminder here. But I'm on with Savvy Trader. That's why they invited me, because Savvy Trader likes me. Wolf Financial, they're leading the group. Stock Market, Ace the Kid. I mean, he's got more followers than I do. Not more listeners, but I mean, let's see.
Did you see my spread account?
No. Mine still didn't even go through. I'm so upset. It's okay. I mean, honestly, it's a shortened week, which is good, and which is good for, it'll be quick for the premium collection. But yeah, I mean, at this point, I can't get any, spreads like that. Were all of them green?
If you go to the top of Spaces, just scroll back, like 5 or 6. You'll see my full TOS account, and every single one is green. And then the Kroger calls were 100%, and shop calls was 50%. The put credit spread was 50%, and then all the other ones were anywhere from 25 to whatever, a couple hundred.
I mean, these guys are killing it. It sounds like. I mean, he's killing it, but my guess is I'm probably the only. Shay's going to be on there. Hamid, who's the CEO of Savvy Trader and Earnings Hub. But that dude, Ace the Kid, is the host. So, I don't know. CEO of Tribeca Great Trading Group. Stock Sniper. I followed him because he's a Trade Spider affiliate. Mom Mavester. Obsessed with trading and market psychology, futures, options, long-term portfolio. Nobel Trading, 12-year options trader and active investor. I mean, I am not in the realm of professional equity and options trade ideas. I'm not in the realm of these guys, but I've got some, let me see. Okay. What did I write down? Spaces notes. I said, I'm going to tell them I'm a fan of Shay and Hamad. I love Savvy Trader and Earnings. Followed Shay's portfolio. I'm 54, and while I'm risky, I can't be that risky, so I'm not throwing shade at him. I don't do options. I know there's probably a huge hate for me here, but I'm just dumb. I've garnered a huge 7-figure portfolio from just an average man's wage through buy and hold. That's the name of the game for me. I'm just dumb. I can't trade options. I'm a top 10% podcaster. I'm told I'm a top 10% podcaster because I make money off the podcast. And they say only the top 10% make money. I don't know. They told me I was top 50 in business, so I guess I'm doing pretty well. My core portfolio on Savvy Trader is free to follow. It's doubling the S&P. That may not be what everybody wants to hear, but it's 35 stocks that, in my opinion, you just trade. And you can't get hurt by these 37 stocks if you get 35 stocks if you get to a bad position. I'm 53. I don't mind being in some risky names, but protecting the downside while at all times high is huge. So let that be to you. And then I said, let's hawk two of some stocks in my 4-hour algorithm. So I got bits. My number one rule is don't trust a douche on the internet, and I am that douche. My number two rule is don't trust Jim Cramer. So yeah, I got some stuff written down. Do not worry. I'll make it a little bit interesting, but I can't listen to these spaces. Honest to God, I just get onto them and I get off. I can't. It just, to me, bores the F out of me. How can you sit there and just watch some dude? Let's Ace the Trading Kid. Let's look. He says that you can follow his marketplace.rocketscooter.com. OWS Ace the Kid. $89 a month for Discord. Ace in the Whole weekly newsletter. My long-term portfolio. I guess he does Twitch. OWS. Ace the Kid Discord. Twitch live stream. Ace in the Whole weekly newsletter. I mean, kudos to him. He probably makes some money. Discord, courses. He doesn't have courses. Affiliate links. I don't know what Rocket Scooter is. Alerts, newsletters. What's Rocket Scooter? Oh. I mean, let's see what Wolf Financial sells. Future Millionaire Makeover. The Ultimate Instagram Growth and Monetization Blueprint. Wolf Financial. Trade on the same brokerage as me. I use Trade Aries because they are the best brokerage out there. Insane execution speed. I don't know. I don't know that they're all grifting, but listen, I sell stuff too. I got the TrendSpider stuff. I've got Alpha Picks. I don't sell you a course. In my newsletter, that was started. Basically, the reason I started the newsletter was to post charts. And the only reason I started charging was because, and it's for the weekend newsletter. And yeah, it's expensive. But part of the reason it's expensive, I want people following me. So, this was a great, by the way, this was a great episode. This dude is making $20 million a year off a freaking newsletter about farming, crops. $20 million a year. And he's a one-man newsletter writer. Crazy. Paying 50% in taxes. But, yeah. So, okay. Enjoy your nap, Brandon. I am out of here. I hope you guys enjoyed it. I'll have everything posted and the newsletter out in a bit. Okay.